Today, we're going to dive into the incredible story of a company's transformation, all seen through the eyes of the investors who spotted its potential more than a decade ago. We're talking about SRF Ltd. And its journey from a complex industrial business to an absolute chemical powerhouse. Okay, so let's set the scene. Our story kicks off way back in 2011 on the Value Picker Forum, a place where really passionate, smart investors get together. A small group there started taking a hard look at SRF, an industrial company that, honestly, on the surface, looked pretty complicated. But here's the thing. They saw something special hiding under all that complexity. They didn't see a simple, easy-to-predict business. No. Instead, they came up with this really great metaphor to describe it. They called SRF a strong horse. So what on earth did they mean by that? This quote from one of those early investors just nails the whole idea. SRF wasn't going to be a smooth ride. Its returns would be lumpy, as they put it. But it had power. It had some serious potential. And the key ingredient to unlocking it? Patience. This was always going to be a long-term game. So let's hit rewind and see exactly what these investors were digging up back in 2011. What was it that made them believe in this strong horse when its path looked so, uncertain? And here's the kicker. The initial attraction wasn't some flashy new product or a crazy new technology. It was something much more fundamental. They were just really, really smart with their money. The core of the whole investment case was that simple. Management was being incredibly savvy with the cash the company was making. So what were these right things? Well, first off, the company was buying back its own shares, which is always a great sign of confidence. It was also investing heavily in its factories and equipment, building up its capacity to grow. Plus, it was paying out solid dividends to shareholders, and, most importantly, profits were just growing at a fantastic clip. These were all signs of a healthy, really well-managed engine. But hold on. It wasn't all sunshine and roses, not by a long shot. As these investors dug deeper, some very serious questions and risks started to pop up. No investment is ever a sure thing, and SRF definitely had some big, dark clouds gathering on the horizon. 3 big issues really stood out. First, they were pouring a ton of money into their packaging films business, which is a notoriously boom and bust kind of industry. Second, a nice chunk of their cash was coming from something called carbon credits, basically payments for being eco-friendly, but that whole program was about to end. And third, their main business, nylon tire cord, was facing a huge long-term threat from a big technology shift to radial tires. Now this slide is where you can really see the problem. Just look at this. Technical Textiles, the business that was under that long-term threat, made up over half of all their revenue. But even crazier, look at the profit share for packaging films. That unpredictable cyclical business was generating a whopping 42% of the company's entire profit. So the very parts of the company that everyone was worried about were the ones paying the bills. Yikes! All right, buckle up. We're going to lease 2011 in the rearview mirror. Let's hit the fast forward button and jump more than a decade into the future to see what actually happened to that strong horse and all those big questions. And wow, just look at this. This is the result of that decade of change. The company is almost unrecognizable. The chemicals business, which was just a small piece of the pie back then, has absolutely exploded to become the main event, now making up 70% of revenue. It's a total transformation. I mean, to put it simply, the entire story of this company just got rewritten. The risks, the opportunities, its whole identity, everything is different now. So, now that we have the benefit of hindsight, let's go back and finally answer those big, nagging questions from 2011. Okay, so let's tackle that first big worry, that massive investment they were making in the volatile packaging films business. What ever happened with that risk? The answer is pretty cool. They basically outgrew the problem. Think about it. Back then, it was their single biggest profit driver. Today, it's just 10% of their revenue. The business is still cyclical, sure, but its power to really hurt the overall company has been cut way, way down. And what about that second major headache? The long-term threat to their nylon tire cord business from the rise of radial tires. How'd that play out? And again, it's the exact same story. What was once the absolute core of the company, making up over half of all their sales, has now shrunk to just 20%. They successfully steered the ship away from its legacy business before that threat could sink them. Pretty smart. So, if the old businesses have taken a back seat, what exactly took their place? Let's pop the hood and look inside the new engine that's driving SRF forward today. Okay, so this chemicals division is now a diversified beast. It's got three main pillars. First, you've got refrigerant gases, the stuff that's essential for all our air conditioners. Second, there are these advanced materials called fluoropolymers. Think of things like Teflon, but used in super high-tech electronics. And third, specialty chemicals that are basically the secret ingredients for the agriculture and pharmaceutical industries. And this is no small operation. Just to give you a sense of their dominance, SRF holds a massive 60% market share for refrigerants in India. That's not just a big slice of the pie, they practically are the pie. That kind of leadership is a huge advantage. And they are not resting on their laurels. A recent partnership with a global leader called Chemours really shows you what their next move is. SRF is now using its manufacturing muscle to produce some of the most sophisticated chemical materials for the entire global market. They're moving up to the big leagues. So, after this incredible decade-long journey of transformation, what does the future hold for this strong horse? Let's take a quick look at a current assessment of the company's health. According to a recent professional analysis, SRF is scoring extremely well. Just look at the excellent ratings for both financial health and growth prospects. That's not a word analysts throw around lightly. It basically confirms that the smart capital allocation those early investors spotted back in 2011 has continued, and it has successfully built this powerful new growth story. And so we come full circle. The strong horse that those investors bet on all those years ago is still running, but it's in a completely different race now. This isn't a race of textiles and packaging anymore. It's a race of specialty chemicals and advanced materials. The question for investors today is, after such a powerful and incredible transformation, can it maintain its pace?